Hello ICT traders, welcome back to the channel. In today's video, we're going to talk about ICT mitigation block, one of the 7 institutional reference points in the ICT concept. I'm going to show you everything about mitigation block and how to easily identify it on your chart. For those of you who are starting out with ICT as complete beginners, on this same YouTube channel, I have a sequential arrangement of the beginners, intermediate, and the advanced level ICT videos that will help you to become a professional trader. You need to go through all of them so you can get the entire detail that will make you to become profitable and a professional trader. So let's get into discussing mitigation block. Just like a breaker block, mitigation block has a similar pattern with a slight difference. We have 2 types of mitigation block. We have the bullish mitigation block, and we also have the bearish mitigation block. So what exactly is a mitigation block? We are going to start with this sketch, and then we'll go to our chart to do some practicals. So let's look at it. Just like a breaker block, mitigation block is a failure swing, just like this pattern you see. I told you that when you see price move like this, okay, and have a retracement, and the next push we see price could not take out the high it created right here, but then we see price crashing down into this area. We call this movement an M pattern movement. So let me show you something right here. Remember, if you watch the video from a breaker block, I told you that a breaker block is a failed order block somewhere around here. So this order block that was supposed to be our support in this trending market is now becoming something like a resistance. So it is no longer an order block, but a mitigation block. The only difference between a breaker block and a mitigation block is that a breaker block will have to push above the previous high before crashing into it. But a mitigation block is a failed swing from here to here. You can actually see that it couldn't even take out the previous high it created. But a breaker block will take out the previous high it created. So a breaker block is somewhere here, just like this one. Likewise, a mitigation block is somewhere here. They are so similar. The only difference is that a breaker block takes the high, while a mitigation block couldn't take the high that was created right there. So price is expected to come back into this level, this place, before crashing down. That is simply what a mitigation block is. So in this case, this is a bearish mitigation block. Why is it a bearish mitigation block? It is simply because it pushes price from that level downward. So this is what a mitigation block is. Likewise, we also have a bullish mitigation block in this pattern. Price comes down here, push up, failure swing to the downside and push. When we are dealing with a bearish breaker block, we are going to see something like this, take out this level before crashing into it. So you see the difference. The only difference is that this guy is a failure swing, while this guy has taken out this level. So I hope you understood what I just explained right here. A breaker block and a mitigation block have a very slight difference. You can check the video on breaker block on this same YouTube channel. I think this is the video. I've dropped the video just yesterday. So make sure you check it so you can get it in detail. So it is a failed order block that is now acting as our mitigation block, this particular one. I'm going to show you that on our chart just briefly. I'm not going to take much time explaining this because this is something that I believe every single one of you should be able to identify on your chart. So I have an example right here. Price swing right here, pushing to this level. Can you see this? Coming down into this place. So this is what we see from here. If I bring this right here. So as a trader, you're watching this and you see something like this, break of structure, and price moved up. Now we're expecting price to do something like this, to go up to this level. But in this case, price had a failure swing, pushes up to this place, crashing then crashing into it, not taking this high. Can you see this high was not taken out? So when we see this crash into this level, so in this case, this is our mitigation block, the last red candle that price actually printed. I would like to always mark the entire candle. You know, sometimes people mark just the tip of the wick or this one, but I like to mark the entire candle because I want to see some reaction around that area. So if price comes back to this guy, that is when I expect it to push down. I'm not showing you an exact strategy to trade with a mitigation block. I'm simply showing you what it means to see a mitigation block and what you should expect around this. I will make subsequent videos on how to bring it into trading, but what I'm doing right here is just to show you what a mitigation block is and how to practically and easily identify it. So what we expect is that price should retest this guy and push down, and that is exactly what a mitigation block is. Can you see price testing it? Already tested it, and we expect it to do some movement downward. So this is how a mitigation block is identified, guys. Pretty much easy. A bearish mitigation block, a bearish mitigation block, you're not always going to see it as a perfect price action. So that is practically how to identify a mitigation block. Let's see if we can see some more examples of a mitigation block. Do we have more examples? I just showed you a bearish mitigation block. I hope there is more examples right here that I can see to show you. Okay, so look at this. I'm saying this guy, you're not always going to see a perfect price action, guys. Like the sketch I showed you, movement here, pushed up, price came back, and then continue upward. This guy, this is a bullish example in this case. This guy, okay, this guy is now acting as our mitigation block. So you're going to see this time and again happening on your chart. You're going to see this time and again happening on your chart. It's very easy to identify them. Do we have a mitigation block on this price action that I can show you? Pretty much easy. Okay, look at this one, guys. Price pushed down to this area, pushed up, had a failure swing to this area, coming to retest it, and then moving upward. So you can literally identify this so easily. You can actually see it right there. Taking out this, we have this form of a W, you know, formation. And which one is your mitigation block? This last blue candle, since we're dealing with a bullish market. As price comes to this area, we expect it, you can actually see, to react from there and move up. So this is practically what a mitigation block is. In practicality, I'm not going to take much time explaining this simple concept. I'll make more videos explaining the ICT concepts that are very important for your becoming a profitable and a professional trader. Make sure you hit the subscribe button and turn the bell notification, so every time I make video, you're going to be the first person to get access to it. Thank you guys for watching. See you in the next video.